Palantir, another stock which has had a huge run up. I know you had a good cost basis or have a good cost basis for Palantir, but recently you've continued buying despite the massive run up. And that's not something you always necessarily do. Can you let us know your thought process around why you felt this has been the time to make a play a bit like that?
Yeah, I just bought a ton more shares, even at $15, and that's the first time I bought Palantir here for a bit. Pretty much every, I think every other share I owned up until that point, I bought less than $10. A lot of sevens, eights, nines, kind of in those ranges. And so, at the end of the day, it's always tough for me. It's a very, very tough decision to pay a much steeper price. I mean, I was paying $7, $8 for Palantir, and to pay 15 is not an easy thing to do. But then I just had to look at it and say, am I going to make a lot of money, in my opinion, buying a stock at 15 something over the next 3 to 5 years? In my opinion, yes, based upon what I think Palantir's net incomes are going to over the next many years. And what I hear Karp talking about the business, the way he's talking about the business and the overwhelming demand, I mean, it's very hard for me not to take that to a place where I think we're going to do very, very well on this. So yeah, it was a very tough decision. I don't like doing that. It makes my cost basis look worse. And it's not a good feeling to pay so much more for a stock. But at the end of the day, I think I think Palantir is going to be a $50+ stock. We'll see. I think it's going to be a $50+ stock in, a few years from now. And so if it goes there, like I think it's going there, I'll be very happy that I bought shares at 15 something dollars a share. And so that was my view in regards to that.
Yeah. And is there a maximum share price at the moment where you would not touch it?
No, gosh, not really. I need to see what happens over this next 2 quarters with numbers. If Palantir has some sort of situation, like an NVIDIA type situation, where their revenue just starts to skyrocket, you've got to change all your numbers around the company. And especially if that looks sustainable, which for a company like Palantir, it seems like they get a lot of their deals signed again and again and again, very sticky business model. So if all of a sudden we see Palantir going from, I think analysts are expecting this upcoming quarter of them to grow 12 to 13%. If Palantir all of a sudden's like, we're growing 33% or something like that, I've got to totally relook at my whole thesis, my numbers, my bullish cases, my base cases, everything, because that's a whole different scenario. And if all of a sudden Karp's like, yeah, we're confident going back to the 30% plus growth for many years to go in the future, that changes everything. Because then instead of a company that we were talking about 13% growth or 15 or 18%, all of a sudden now you're talking about 30%, and that's going to change the bottom line in a much more substantial way than the actual top line's changing in terms of percentages. So that's kind of my opinion on that. For now, I'm probably good on what I own with Palantir, unless the stock was to go down a ton, or the fundamentals of the company are getting so much better that I'm like, it makes sense. Even if it was at 22, there's a potential where a stock price goes up and it actually becomes cheaper. And that's if the fundamentals of the company got exponentially better than what you previously thought they were going to be. A good example of that is NVIDIA. NVIDIA ran into earnings. Then they come out and say they're going to grow 60% revenues when analysts had them at 6%. Shocking. It was such shocking news that you got to totally change your numbers with NVIDIA. You got to totally change your outlook for the company. Your forward PE that you thought you were paying is probably much lower. And at the end of the day, if you were an NVIDIA shareholder, you honestly should have been buying that stock even after it went up 20+% that next day, because, gosh, it was actually still a deal. So that's where I'm at with Palantir.
Mm. And do you regret not buying more? Now, I know that's obviously yes, because it's the stock has run up so much, so it's obviously yes. But when you look back a month ago, 2 months ago, did you have the conviction and you were shy pulling the trigger, or has your conviction grown at the same time as the stock has appreciated? Which is then, okay, I wish I bought more, but what could I have done about it?
Yeah, I'm pretty happy with the amount of shares I bought. I mean, obviously, every stock you ever buy and it goes up, you always wish you could buy more. But I'm pretty happy. When I looked at Palantir's risk reward, it was very attractive. But let's be honest, before this new super cycle around AI really started to build, Palantir was kind of, they were reporting some very disappointing numbers for the most part until really like the past 1 to 2 quarters. Past 1 to 2 quarters, things have started to change, getting to profitability. A lot of excitement starting in AI space. Alex Karp saying things like we're getting as many calls in a month now inbound that we used to get in a year. a lot of those sorts of things are changing the fundamentals of Palantir much to the better place. So I always look at it from a perspective of like risk reward. And I liked the amount of shares I have. I like the amount of risk I've taken in Palantir, and I feel pretty comfortable. And if the stock was to go down a ton and I think the fundamentals are going to get better, I'll buy more shares. But there was a lot of stocks I bought last year. There was a lot of stocks that were steal deals, including even better risk reward profiles. I love my Palantir, but I like Meta better at 88. I'm sorry, man. And so that's why I bought $77,000 of Meta stock in like a day. The risk reward's better there in terms of like not just upside, but potential downside. And so I look at all these different things, and there's always so many stocks, man, that are trying to get your money. There's Tesla's trying to get your money all the time. You got new companies going public all the time. There's tremendous amounts of opportunities in the market. There's dividend stocks that are like slam dunks that are just easy money. And man, it's always tough decisions. So I feel comfortable with my allocation in Palantir, but don't be surprised if I buy more shares over the next few years.
When considering the valuation for a company like Palantir, where'd you start? Because obviously the company's only just got profitable. Growth hasn't
Yep.
been hasn't been too steady, but obviously lately it's picked up and the potential's huge. The margins are great, and there's a huge secular tailwind behind the company. So, like, how do you value Palantir?
Yeah. So in terms of right now, like where would I even start with Palantir trying to figure out valuation wise? First thing I like to look at is forward P. And that's just kind of gives you a starter point for what analysts are expecting for Palantir next year. Okay, so look at what analysts are expecting for Palantir for next year. The forward P of Palantir might be, I can't remember what analysts have them at. It's probably either a 40 or a 50. Okay, so it sounds rich, but when you take into account a company that's at its infant stage of profitability and is going to grow double digits for a long time to go in the future, the biggest question for Palantir is, are they growing 15% on average, 25% or 35%? I think that's the only question, is what type of double digits are we talking? I look at that and I say, that's pretty darn compelling. So maybe I'm paying 2x or 3x the market, but for a company that's going to likely grow revenues a minimum and EPS by a minimum of 5x, the average stock in the market. But yet I'm paying maybe a 2 or 3x valuation. Now, it's very possible this company could be growing 10x if we're talking about a 30% plus type revenue growth rate, right? And assuming the average company out there growing revenues 3% or so. So 3 or 4%. So then we're talking about, I'm actually getting a steal deal in terms of Palantir if they are able to grow at that sort of rate that's far outpacing the market. So that's what I always like to look at and kind of think about in regards to that, because a lot of people just look at it and they say, gosh, the stock is trading 2x the market in terms of forward P or 3x the market. If they're going to grow 10x the market, you're stealing money. If they're going to grow 5x the market over the next several years, you're stealing money. And so that's usually where I start. And then I kind of work my numbers backwards from there and try to figure out, do I think analysts are off? In regards to Palantir, I think analysts are off. I think their revenue projections are too low. I think analysts' EPS projections are too low. So I think ultimately at the end of the day, I think what you think you're paying for Palantir is actually lower than what it says on paper in terms of if you look at forward P metrics and things like that.
So, as the quarters tick on, what are you going to be looking for from from a short term or a long term point of view, whether that's profits, company execution, revenue?
Yeah. So the main thing, revenue right now. Obviously, we got to continue to see profitability and hopefully profitability ramp up, especially if revenue comes in better. But at the end of the day, I mean, Carp's been talking a pretty damn big game in some of these interviews and getting people pretty darn excited. So over the next, I would say 2 to 3 quarters, we need to start seeing that deal flow come through in terms of the numbers. Now, we're already hearing about a lot of deals announced. I mean, almost on a daily basis, it seems now at this point in time, we're hearing a new Palantir deal. So that's exciting. Great news. But we got to see it all, obviously, put into a quarterly report. What are the actual revenue numbers? So I want to see revenue that crushes what analysts have, just absolutely decimates it, not even close. Not like, oh, we were supposed to grow revenue 12%, but we grew at 14%. I just want to see them absolutely obliterate revenue. I want to see that EPS really come through, and I need to hear very strong commentary around future quarters. They don't have to give specific numbers, but I want to hear like, this all this demand we got coming in, all this interest is going to add up to some huge numbers over the next several quarters. So that's kind of what I'm looking for Palantir in the short term. And I want to hear, really, are they continuing to build out that sales team? Because they got this unbelievable opportunity in front of themselves. Everybody's, checking out AI products, trying to see what's out there. Palantir, we believe it's got the best of breed products. We need that sales team to convert. We need them to get deals done. We got the real deal Holyfield. And so the only thing that's preventing Palantir is just getting that sale done. So we need to make sure everything's on pace in terms of that.
Yeah, you mentioned the sales team there. We know that's something Alex Karp was really trying to roll out sort of 18 months ago, when he was talking about he's been the front guy, he's been getting all these big deals and etc. And then we had this sort of quiet period where the sales team was meant to be in, but we weren't seeing like a big explosion of deal flow. Recently, we've seen quite a lot of deal flow. It's a little bit difficult from the outside to analyze how well that sales team is doing. I mean, obviously, if we start seeing a huge amount of deals come in, we can assume they're doing quite well. I mean, and the stock-based compensation has been huge for the company, and a lot of that will be going to the sales team as well. So do you think that sales team is starting to dial in?
Well, there's a few things in regards to the sales team. I mean, one, you need the leads coming in to convert sales, right? And so the great thing for Palantir is when Alex Karp says something like, we've got, as many inbound calls in a month that we usually have in a year, gosh, that means there should be a massive amount of leads coming in for Palantir. And now it's just up for the sales team to close deals. So I don't want to dog the sales team too much for the numbers in 2022, which were pretty disappointing to all of us Palantir shareholders. I don't think there was anybody that looked at Palantir's revenue in 2022 and was happy. I think everybody was disappointed, right? Including myself. But I think a lot of that just came down to 2022 was a year where companies were very scared to spend on anything new. CapEx spending, people were trying to readjust their businesses, trying to figure out, are we going to do layoffs? Everybody got hit by the Fed raising rates at the fastest clip we've pretty much ever seen and was totally caught off guard. And so the business community kind of shut down a little bit in terms of just trying to figure out, where are we going? We were going to really spend $50 million a year on Palantir, $100 million. And so that makes it tough from the sales team if you don't have leads that are coming in that are at least warm. Now, there's a whole different dynamic. Every company out there, every government agency understands they have to leverage AI or they will be left behind. And so I can tell you the customers coming to Palantir now are going to be much more willing to do deals in a lot more in interest in listening to those sales teams to hopefully convert and get these deals done. So, and Alex Karp is still, in my opinion, the ultimate salesman for the company in terms of these monster deals. If you see something that's $100 million plus deal, just keep in mind it's probably Karp had a huge play in that. But we got to have more than just, obviously a $100 million deal, a $500 million deal. We need a lot of these $10 million deals, these $5 million deals, $20 million deals. And that's not always going to be Karp involved in those sorts of deals. So.
So for Palantir to break through to the next level, in your opinion, what needs to happen? One thing for me as an investor, it could be, as an investor myself in Palantir, it could be their go-to-market strategy. We know that they often have to deploy a lot of engineers. Is there anything in particular you're looking out for Palantir to really break through to that next level?
Yeah, I mean, I gotta at the end of the day, when you own a stock, you've got to have enough trust in the company that they're going to make the right decision, right? It would be easy for me to say, oh, Palantir should run their business similar to how Snowflake runs their business, or AWS, or they should make it easier to onboard clients or have free trials or whatever, right? But at the end of the day, the way I think about it is Palantir is going to do whatever is in the best interest of Palantir. I'm not in the nitty gritty of that business enough to make an educated assumption on they should do this way or that way. I haven't worked in that industry. My understanding is from, studying the financials and the business plans and looking at competitors and things like that, but not from actually working in it. It's different than if I had, if I was judging a retailer, because I come from the retail industry and management, so I have a judgment of that, right? Or if I was looking at housing, because I, have done work in the real estate industry and things like that. But for a business like that, I've just got to trust that Karp and the team knows what they're doing, and they're going to do what's best for the business. And there was an interesting comment, very interesting comment Alex Karp made that kind of went on the DL maybe a little bit in an interview recently. And he says, we would rather our customers try our product first and then we can work out the deal later, something along those lines. And it was not a lot of people caught that, and it did make me think, like, is that a little bit of a change in strategy? Is Carp's that confident in the product that he is willing to say, hey, we want you to try this, and you tell us how much you're going to pay us for this, right? I was like, wow, that's pretty powerful. When you can put, because not a lot of people would do that, right? When he says our product's that damn good that you're going to tell us what you'd be willing to pay, and then we'll think about working out a deal. That's powerful. So yeah, I trust Carp. I trust the team in whatever route they're going to go is the best route to go. At the end of the day, I'm just an investor. I'm not the CEO of the company. I don't want to act like I could run that company better than the COO could or Carp could or anybody. So.
Yeah, I think it's an interesting strategy. It's kind of, have a taste of the good stuff, and then we'll figure out money later. You're talking about confidence in the management there. How much of a high level confidence do you have in Carp and the rest of the executives we see on the calls?
Yeah, I gotta say I've grown more and more confident in their decision making and in the team over the last, I would say, 6 to 9 months. And I think Carp's done a really good job of doing more interviews, and I think he's doing a better job in the interviews. And I think the other thing is, like, when they do conference calls, showing the other members of the management team, which I've been impressed by all of them, to be honest. And so, and also I've talked to a lot of folks who are in the tech industry and are in, like, my private group, for example. And I've even talked to some folks that are in my private group that are from the military. And these folks actually use Palantir, like in real life, use their products. And I speak to a lot of them, and just like what I always come back with is, damn, Palantir's product is so amazing. And it's so amazing because Palantir's got one of the most incredible teams, the overall team in terms of product builders, that you'll find of any tech company in the world. And obviously, Palantir is a very small company compared to companies like Google or Meta or Tesla or any of these other companies, right? But from what I see and what I hear, it could be argued that maybe Palantir is just as talented of a team as these other big tech companies. I've even had some people, that have told me stories inside the private group of things like, I applied for Google and for, I don't want to mention the specific companies, but I applied for this company, this company, this company. For Palantir, I didn't even make it past the first interview. But this company ended up giving me a job offer. And these companies are very impressive that gave them the job offer, but yet they didn't even make it past the first or second round with Palantir, which once again just shows me, like, dang, they got it together over there. So yeah, my confidence is very high in those guys.
What are some of the brand new stocks you've been investing in recently, and which ones of them are you most optimistic about or most excited moving forward?
Yeah, so going into the back half of, because now I'm already thinking, technically we're still in the first half of the year, but we're, only a couple of weeks away from going into the back half of the year. I definitely see some opportunities out there, and it's in a few different places. So a lot of growth stocks have been running. So not to say there's no opportunity in growth stocks. There are a few, and we could probably talk about those. But I definitely see there being more opportunities in dividend and value stocks in the back half of this year, mainly because those stocks have been kind of forgotten. They haven't been the exciting play because obviously a lot of those stocks don't attract the growth investors. And a lot of those stocks have been forgotten because treasuries have been yielding so much and savings accounts have been getting so much. So people are like, who cares about making a 4%, 5% dividend yield when I can make 4%, 5% in a savings account or a treasury? My belief is you won't be able to get 5% plus on treasuries and 4% plus on savings accounts forever. If I had to guess, rates will ultimately be much lower in a year or 2 years from now than they are today. And when that happens, there's obviously going to have to be a return to a lot of these dividend type stocks. So I see there being a lot of opportunities out there in terms of those. Cheesecake Factory is a good example of it, just an easy money stock, in my opinion, that I've been plowing some money into over the past number of months. The next opportunity I see is for actually hedging portfolios. And this is a more complicated subject. I know not everybody's into hedging, but it's definitely worthwhile exploring a little bit about how to hedge a portfolio. And I put together a great 45-minute long video inside the private group maybe a month ago on just all these different hedging opportunities, because a lot of people are just, you're not hedged in the market. And what happens if a crash happens? What happens if, the S&P 500 goes down 20%, 30%? You say, well, I can buy for cheaper. Yes, 100%. And that's great. But there's also, if you had hedged your portfolio, you probably would have been able to make some incredible gains. Then you could have flipped out of that and then piled that in to your long positions at very low prices if you've got a hedged portfolio. So I think there's some real hedging opportunities in the back half of this year, especially if the market continues to run, just for protection, just in case things go bad in 2024. I see a stock like PayPal. PayPal's a steal deal in my opinion. PayPal is probably the easiest money I've seen since Meta last year, when Meta was just disgustingly undervalued in Q4 of 2022. And PayPal is just trading at a valuation right now I'm just laughing at, because this is a growth company, but trading at a forward P of like 12. Whenever they announce a new CEO, I think there's probably going to be a pretty big stock price move in regards to that one, because then there'll be clarity around the CEO, CFO simultaneously, and kind of what their vision is, where they're going in the future. And so I think that's a great opportunity in the market. Another stock I like right now is Revolve, RVLV, e-commerce player, clothing company. A lot of guys might not know it, but a lot of women know it. Trust me on that. And that's just a stock I really like right now. Great management team at that company, good balance sheet, good income statement. They've had obviously trouble growing here in the short term with kind of the macroeconomic weakness, but I think they're going to get back to nice growth in 2024 and moving in future years. So so those are just some of the opportunities I see out there in the market. But there's always opportunities in the market. I think sometimes people say, they see certain stocks going up, Tesla, Meta, whatever, right, having tremendous years, Palantir, and they think like there's no opportunities out there now. All these stocks have gone up so much. There's always opportunities in the market. It's just different opportunities. I can tell you this: the stocks I was buying 9 months ago are not the same stocks I'm buying right now. The stocks I'm going to be buying 9 months from now are not going to be the same stocks I'm buying right now. The market changes. It gives you different opportunities. And this is why I always preach my strategy: growth, value, dividends. I call it GVD. It's my strategy. Growth stocks, value stocks, dividend stocks in your portfolio. Have several of each category, because you're going to get different pitches at different times. Certain times, growth stocks are going to be extremely overvalued. There's going to be no deals anywhere, and it's going to seem like you're in a market bubble. And you're like, eh. So then where do you go to? Well, there's a few places you can go to. One is hedging. So if there's some big downside and that is a bubble you're in, you're going to be able to make a ton of money coming off of that, right? Second place is maybe dividend and value stocks, or the flavor of the month, because everybody wants to pile into growth stocks. So you see opportunities there. There's going to be other times when you're in a very risk-off market, like we were in 2022, especially the back half of 2022, where no one wants any piece of mega cap tech, of growth stocks. People just, they don't care what price you give them it at. They don't want it, right? And certain times that's where you need to be plowing that money in, right? And so, so bottom line is there's a lot of opportunities out there. There's going to continue to be opportunities. They're just going to be different opportunities. And that's whereas you as a more experienced investor over time can identify those opportunities and figure out, this is where I need to go next. This is where I need to go next.
How much cash are you in at the moment, percentage-wise?
Yeah, I'm about like 12 to maybe 15% cash at the moment. So I would call that maybe a little bit on the later side, because I still see a lot of opportunities in this market. And so every week I'm buying. Every week. Every single week I'm buying out there. And I'm also buying hedges in the market. So just in case, the big recession comes that they've been talking about, just in case it comes in 2024, I'm hedging up just in case, so I can make a lot of money from that if that even transpires. So, and I don't really see my cash levels changing much. I think I'm going to probably remain kind of in the 10 to 15% range, probably for at least the next 6 to 12 months, to be honest.
Okay. And you mentioned a few stocks you have been buying and you're very excited for, PayPal, for example. Are there any which you haven't actually fired the trigger on yet, but you're really excited? Maybe you've had that sort of fizzle moment you get when you start looking at a stock and get really excited and do the deep dive.
Oh gosh.
Or ones that you have literally just started building out.
Yeah, there's a few that I am I've started some positions, and I'm going to probably build out actually some hated stocks that people don't like right now, like Target, Disney. Yeah, you might not know about that over in the States, man. Everybody's in a fit all the time. But at the end of the day, people cancel these stocks, and then no one remembers it 6 months from now, 3 months from now, 3 weeks from now, because somebody does something more dumb, and then everybody's mad at them, and then everybody's mad at the next one. So, there's definitely some I've kind of been buying why they just crashed, because I'm like, okay, y'all can sell these stocks. I'll take these shares off your hands. And then there's actually, there's a few stocks I've been researching. One that comes to mind is a very new stock I've been researching, which is actually kind of an older company, Oracle. I've actually been doing a little digging around Oracle over the past, I'd say 48 hours or so. And the reason being is Oracle has these tremendous growth vectors in their business in several different categories that I'm like 76% growth, 55% growth, like some crazy growth vectors in some of their segments of their business that I'm like, what is going on at Oracle that has these sorts of growth rates? So I'm doing some digging on Oracle right now, trying to see if there's something there. I've been working on AMD for a while now, and obviously the stock has climbed tremendously. But I'm really trying to see what AMD really has going. I'm trying to look on the tech side. Are they actually going to be a serious competitive threat to NVIDIA in terms of the AI race? Because those AI chips are selling for like, I mean, from what I've heard, $20,000-$30,000+ per AI chip. It's incredible. And so doing a little digging there. And then, yeah, Texas Roadhouse, Cake are kind of somewhat newer stocks. I maybe held them for a few months now that I'm adding shares to, specifically Cake mainly. So, but yeah, and then, a little SDAO here and there, a little SQQQ here and there. Just recently, I just bought my first share of SQQQ, which if this NASDAQ keeps running hard into the end of the year, that might be something I maybe build up into a little bit bigger position, maybe even some call options on that, which is essentially like a 3x against the market, which I know for some people that probably went way over your heads. And don't worry about it, man. Everybody can get experiences sometime. The inverse ETFs and all that fun game. But anyways, yeah. So I just see I just in a really good spot in the market right now. I got to say that, in terms of my portfolios on the long side, I'm just looking really, really good. I love the way my companies are starting to execute, and I can't wait for the next several quarters. This is like probably the most excited I've been for my company's earnings over this next, I'd say 2 to 3 quarters. So really happy there, really happy with my hedging, where I'm positioned in the market. And I'm not scared at all. If there's a crash, I'm going to make so much from my hedges, so I'm not scared of a crash. If we have a kangaroo market that goes nowhere for a bit here, I'm fine with that because they give me more time to buy some of these stocks that I think are extremely discounted at great prices. And if the market continues to go up, then it's going to be money printer time. So I'm just really, really happy with where I'm at in the market right now.
Tesla stock, it's way up 100% year to date. Have you picked up any more Tesla stock this year? And would you consider buying at current levels?
Yeah, I picked up some at the very beginning of this year. It was a brutal year for all of us Tesla shareholders to have to go through last year. It was, very, very brutal. But at the end of 2022, and specifically going into this year, the stock is just very undervalued. For anybody that has a longer term outlook on Tesla, very undervalued. So I actually bought some shares for the first time in a long time, as in since 2019. And so instead of just being a holder of the stock, I was a buyer. No, for me personally, I'm not going to add any more Tesla shares here now that the stock's 250 plus. Not that I think it's not a good deal. You can still make probably a good amount of money over the next few years in Tesla stock. Just for me personally, it's already a huge position for me. I already have, I believe it's over $400,000 in that stock. And so for me, that's a really good sized position. And I feel comfortable with kind of my level of risk. In regards to Tesla, I've had as much as around probably close to $1 million or maybe even over $1 million at one point in Tesla stock. And so for me, kind of in that 400,000 to 500,000 range feels about right. But yeah, you could say if I didn't own Tesla, would I be buying Tesla shares? The answer to that is probably. There's a lot of very appetizing deals out there in the market right now, but yeah, Tesla is still it's still undervalued. The forward P, people look at the forward P, they think, it's got to be very overvalued. When you look at the growth rates that the company should command over this next several years, it's not nearly as overvalued as it might look on first surface when you look at a forward P or something like that.
So considering Tesla stock primarily from a stock point of view, from an investment point of view, what are the key metrics or things you're looking out for, whether it's top line growth or bottom line growth over the next few years?
Yeah, obviously revenue is always going to be, first and foremost when it comes to Tesla. Are they able to continue to put up, very nice double-digit growth, as in like 25% numbers, 35% numbers. In good times and hot years, maybe 45% numbers. We'll see what Cybertruck puts up. That should be very impressive. Gross margin, extremely important in regards to Tesla. And obviously in regards to Tesla's margins, they've taken certainly a hit over the past few quarters as a lowered price, right? And we really want to see margin stabilization, and then we want to see margins hopefully start trending back up, especially in the back half of this year and moving into future years. And then the bottom line is obviously very, very important for this company. At the end of the day, Tesla from the masses, Tesla look at Tesla as an auto manufacturer. And if you're an auto manufacturer, you got to put up those extremely impressive net income numbers, those extremely impressive EPS numbers, because that gets everybody off your back in terms of like looking at it from just a valuation standpoint of your profitability, your PE ratio, your forward PE ratio, and things like that. So those are three main metrics I'm looking at personally. I'm actually excited to see the growth in the energy business. I mean, that business has never really it's never really what's been attracting me to Tesla. But I've seen some of the business and some of their storage products and whatnot in some of these recent numbers that I'm absolutely blown away with. So that's a business line I'm actually very excited to see over this next 1 to 2 years and what happens there.
Yeah, definitely. Energy growth it's kind of gone parabolic. They've just launched their mega factory in California. They've got another one announced in China. What do you think the playbook could be there for the energy? Do you think they could just start banging out these factories all over the world like they've been doing gigafactories?
It's a potential. The reason the energy business has never really gotten my interest as much is because that's a harder business for me to see how big the opportunity really is. And I would put it like this: I kind of almost feel like somebody would have felt if they were investing in Amazon stock back in, let's say, 2008, 2010, 2012, before Amazon was really respected from AWS. Because back then, people really just looked at Amazon as this big e-commerce company, right? Kind of like most people look at Tesla right now as just this big auto company. And so for me, it's hard for me to say what they can scale to, what they can do revenues there. For me, I just look at it as a cherry on top, and it's this huge opportunity that I don't know how big it is. I don't know, if this is a $20 billion business down the road, or 30 billion, or 50 billion, or 100 billion, and that's pretty exciting to me. I look at Tesla just on the auto business, and I feel like the stock's undervalued. That energy business is the AWS, in my opinion. Just it's a cherry on top that we'll see how big it grows to. But I'm very excited.
And we've had news recently from the Fed that they are halting rate hikes. What exactly will happen for the rest of the year, we don't know. But interest rates has a very big impact on the auto market. The higher the rates, the higher the monthly costs of new vehicles, the less people are buying them. It's as simple as that, pretty much. Are we at the light at the end of the tunnel then for this slowdown in the auto market as rates haven't been raised, which is quite a big moment?
Yes, it's a big moment. I don't think we're necessarily out of the woods yet. I think this is still an overhang for Tesla and all auto manufacturers, to be honest. But I think it's specifically an overhang for Tesla. The other big kind of negative thing outside of just interest rates is consumer confidence, which consumer confidence has been in a pretty bad place for at least, I would say, about 18 months now at this point in time, 12 to 18 months. And so consumer confidence has improved a little bit off the lows of 2022, which we saw about the lowest we've ever seen in terms of consumer confidence. But I would say if we can get interest rates to hopefully start going down at some point next year, I think that could be definitely a tailwind for Tesla's business rather than a headwind that's going forward. But ultimately, consumer confidence as well, because let's be honest, the going to purchase an auto, it's the second biggest purchase for almost everybody out there, right? You got people go to buy a home, buy a car. The car is usually the second biggest purchase in somebody's life. And if you're not confident, if you're not feeling great about your financial situation, you're not going to go spend $50,000, $40,000, $60,000 on a Tesla. That's just bottom line with that. So two overhangs. I feel like we might be getting in a better place, but I'm very kind of, I would call it middle of the road in regards to my feeling on that. I don't feel like we're out of the woods yet. I feel like we have potential, but don't get too excited yet.
Yeah. Okay. When I consider investments, sometimes I think, it's really good to simplify your thought process. And sometimes I simplify it into two things. One is the current growth rate. And then the second is how many years of growth. Now, when you think about Tesla from this point of view, is it kind of the holy grail of stocks? Because not only is there potentially a high growth rate, that high growth rate could be around for a decade, 2 decades with the amount of other call options they've got in the business. How do you sort of think about that?
Yeah. So I think about it a few ways. For Tesla, I look out and I really try to view like the next 3 to 5 years. And although it's very fun to think about the next 10 years, the next 20 years with Tesla, it is hard to forecast, right? And for a lot of us Tesla shareholders, we've heard it for a million years now. The competition's coming. The competition's coming. We've heard it for certainly as long as I've been a shareholder, and even before that. And Jim Chano's going on CNBC and all these folks, right? The competition's coming. And the one thing I will say is it looks like the competition is finally trying to enter the market in a more serious way this year, next year. And we'll see if it's actually any competition. So far, we haven't seen these other players really cause any sort of damage in regards to Tesla's business model. And I'll say we're going to have a lot more clarity over the next 24 months. Because if we still don't see Tesla's business model being hurt from the competition 24 months out, then I think that gets a lot easier to run numbers and projections for Tesla over the next 5-10 years, right? Because then you got that kind of out of the way. Right now, we're still trying to see like what are all these other auto manufacturers doing. They're having a lot of problems trying to ramp EVs at all right now, and they're also having demand issues. That's the other problem, and that's what kind of is giving me confidence about, do people really want EVs, or do they just want a Tesla? Because I'm looking in Lucid, for an example, that is seen as they're supposed to have a really good product. They're having a lot of demand issues when it comes to Lucid, and you got to say, why is that, right? And so in regards to Tesla, it's a very exciting story. But if you're trying to run projections on Tesla, you need to run it, I think, 5 different scenarios. You need to run a ultra bearish scenario. You need to run a bearish scenario. Your middle case, so this is like your base case, I call it. What you think, like if you had to put your life on a line, that's the case you think, right? You need to run a bull case and a super bullish case, okay? And you need to run different revenue projections on what you think are realistic under those different scenarios in gross margins, and then what do you think can be actually the bottom line? And I think you can do that for about the next 5 years. But the next 10 years, I think it's much more difficult, because we know the landscape obviously changes over time. And Tesla right now has a huge advantage over the competition. Do they keep the pedal to the metal? I think so. But that's obviously not always a possible thing to predict. Maybe they lose their competitive edge at some point. I hope not. I think they got it, but we shall see.
So speaking about competition, Jim Farley, the CEO of Ford, recently did an interview, and he was talking about how they're struggling to scale batteries, how it's a much more difficult task to do than they initially thought. Then he was also talking about the sort of in-car operating system, which Tesla's completely crushed, and they're trying to catch up with that because they've got so many different suppliers, and then each bit of software, whether it's like the seat module or anything like that, is all coded in a different way. It can't all be linked up. Do you both those things I just mentioned are 2 examples, but do you think it's just going to be so much harder for competition to catch up than people think? And then are you optimistic for competition catching up in the next few years, or do you think it maybe won't happen?
Yeah, and so one of my theses always on Tesla was everything Tesla's doing is so far ahead of the competition, and this is going to be way harder for these folks to accomplish. Let's be honest. A lot of these auto manufacturers put off EVs as a serious thing until really the past few years, and all of a sudden you heard all these announcements over the past 1 to 3 years from all these auto manufacturers. Oh, we're going to spend $10 billion, $20 billion, $30 billion, $50 billion on EV. And I think they're all realizing this is a lot harder than we thought it was going to be. And no one ever gave Tesla the credit for that. And you can't just throw money at something and think it's going to magically work out. You need the right engineers. You need the right culture. You need the right team. You need the right vision from the top that gets everybody inspired to go after that, right? And also, you're trying to beat a company that's already way ahead of you, which is a very tough thing to do. And so everybody's coming to that realization of like, dang, we should have been investing in this technology in a serious way 10 years ago, 15 years ago, when Tesla was. And when Tesla was being laughed at as this money furnace company that was burning all this money. And what are they doing over there? But this happens in business. I mean, you could say, why didn't Walmart become Amazon, right? I mean, Walmart, if we go back 20 years ago, Amazon, 20 years ago, 2003, Amazon was a complete joke compared to Walmart. You couldn't even compare those companies. It was almost laughable, right? And yet here Amazon came and they just ate Walmart's lunch. And now, Amazon's a company that's substantially larger, probably 3x to 5x the market cap, I would guess today, than a company like Walmart, which 20 years ago, once again, it was a joke. And Walmart should have beat them. But Walmart didn't invest the way Amazon invested in the warehouses and network, e-commerce, and take it serious. And then Walmart tried to enter the game way late, and look what they get for it, right? And so that's the problem with all these auto manufacturers. But for the auto manufacturers, a lot worse. For auto manufacturers, a lot worse than it is for Walmart. At the end of the day, a lot of people are still going to go into Walmart. Internal combustion engine demand is just going to continue to go down rapidly over this next 5 to 10 years. And that's a huge issue for these guys because they're trying to get this new technology. And that's why I've always said, people have asked me for years, oh, why not buy Ford stock? Why not buy GM? It's trading at a PE of 5, 4, 6, whatever, right? Some disgusting. And at the end of the day, why would I want to take that risk, even at a PE of 5, when that company is being completely disrupted and they've got to change their technologies completely? They got to change the company culture, the way they do their business models, dealership networks, taking that out of the fold, supercharger networks, right? Which they're now trying to just, cling on to Tesla for these supercharger networks. Yeah, they're finding out, damn, we should have taken this serious 10 years ago, 15 years ago, because we would have been in a lot better spot. But now we're a little late to this game and we're finding out it's harder than we thought.
Yeah. And as you say, the legacy auto was late to the game. They didn't get Tesla, they didn't get the EV revolution, but also potentially some people that don't fully get it yet is institutional investors. There's still a relatively low level of institutional investment into Tesla. Do you think Wall Street gets Tesla yet? And if not, when will they? What's it going to take?
I think Wall Street gets the auto business of Tesla. I think there's a few things Wall Street doesn't quite get yet. I think it's the energy business, and trying to figure out what's the TAM there, what could that be. I think it's the autonomous taxi network opportunity, which honestly, in my opinion, Tesla shouldn't really get credit for that. You shouldn't get credit for a business you haven't even technically launched yet. So even in my opinion, I know some Tesla bulls will disagree with me on that. My opinion on that is, don't give them credit for that yet, right? But they don't understand that opportunity, how big that opportunity is. And the other component I think Wall Street doesn't get yet, they will in a few years from now, but they don't yet, is a services opportunity. And they missed this when it came to Apple as well. Apple had this beautiful services business that you could tell was going to become, in my opinion, the second most important business for Apple, only after the iPhone business. And sure enough, it became that, right? And so with Tesla, the services opportunity is massive. The supercharger network opportunity, finally, people are starting to wake up to this because of obviously the Ford and GM deal. Then you have Tesla auto insurance. You have premium connectivity in the cars, right? Things are going to break on cars over time. Tesla's going to have that sort of opportunity, right? Once cars are out of warranty and you have more and more on the road, batteries are going to need to be replaced. There's a million different things. And so the services opportunity in Tesla is so massive, and so many products that are going to be in that services category that we don't even see today, that are going to come out over the next 3 years, 7 years, 10 years. And so I think there's a lot that they don't get yet around Tesla, but they're going to come around. They'll come around, and especially once the numbers start to hit. The only reason Tesla really had that huge ramp up in the stock price starting in 2019, going into 2020, 2021, right, was because they put the numbers up. Once Tesla keeps putting up these numbers, then it becomes undeniable, and Wall Street says, dang, you know what? We got to buy this baby. So.
And we've just had a pretty epic 13-day rally for Tesla stock, closing green every single day, day after day. Do you think when this penny drops, do you think it will be a penny drop moment for Wall Street, or do you think it's going to be slowly building their confidence? I'm sort of wondering if there's just going to be this moment where they all just start piling in because, they just doesn't seem to be that intelligent sometimes, does it?
Well, good point. But Tesla has always been that stock, to be honest. It's always been that stock that made these incredible runs, that makes the bears say, this is ridiculous bubble. This has to crash. This has to come down. What is going on, right? It's always been that stock. When you look at some of these moves the stock has made since it went public back in 2010 or 2011 when Tesla went public, right? And you look back to some of these moves the stock made in past years, they're shocking. And they're like, that stock went up hundreds of percent in a snap of fingers, 1,000% in a matter of, 2 years, and just mind blowing. But Tesla's that sort of stock. It's one of those stocks that, it's down and out for a bit, maybe a year, maybe 2 years. It's not doing anything. It seems dormant. And then it just goes on this crazy run. And obviously, coming off of 2014 all the way through basically the first half of 2019, that stock didn't go anywhere for 5-6 years. It went up, it went down, it went nowhere. And then it made this absolutely massive move. And so we could definitely be at a moment, if the economy stays decent, that we could be at in another moment right now that's making this epic move that people are just going to be shocked by. And other stocks are like that. It's not the only stock in the market. Nvidia comes to mind, which is always obviously on top of everybody's mind. Nvidia's so overvalued, it's a bubble. They, I hear them on TV. They've been saying that since it was 150. Then it was 200, 250, 300, 400 and plus now. And because the stock's going up so much doesn't mean always it's a bubble. It just means people are realizing it's a bigger opportunity than some folks realized before.
Definitely. And I think the charging infrastructure play is kind of this moment where Wall Street or the general public's realizing, this really could be a huge opportunity here in Tesla. So we've had these announcements from Ford and GM. Do you think all EV companies or all legacy auto is going to have to pile in and join them here?
Ooh, that's a great question. That's a great question. It's a potential. I don't think it's all going to happen right now, but it could definitely play out over the next few years. Because the way I'm thinking about this is, especially with Ford and GM now wanting to jump on the Tesla supercharger network, is we know Tesla's always building more superchargers. And the way I view with Tesla building more superchargers is it gives them even a bigger moat around that business, because they have even more locations, more just chargers in a particular location where it might have been at this restaurant or whatever. They had 4, then they have 6, then they have 8, then they have 10, and so the more jump on Tesla supercharger network, the more I think our others are going to also jump on, because they're going to realize, damn, they just got them everywhere. They've got the most capability, and it's a bad financial decision for us not to jump on to the Tesla supercharger network. So Elon's playing a high level game of checkers, or excuse me, chess. Elon's playing a high level game of chess in this whole situation, and I think a lot of folks are not realizing the level he's playing at, and it's brilliant, man. It's such an Elon move. Seeing the Ford announcement, seeing that GM announcement just made me say, gosh, that is such an Elon move. That is beautiful.
Yeah, I think it's quite a landmark moment as well, because now Tesla is making service margins off vehicles they didn't even produce. I think that is crazy. Do you think this could maybe pave the way for Tesla to have FSD partnerships in the future?
Ooh, that's a good question too. I think that definitely is a potential, because that's another technology that, let's be honest, almost every company is massively behind, and it's basically just hoping somebody solves it so they can adapt that technology in their cars. Let's just be honest about that, okay? And so as Tesla has that, I think it's definitely a potential that Tesla could go that route if they want to go that route. But there's always been a lot of talk about these different kind of concepts and what Tesla could do and how much they want to partner with others and all these sorts of things. And I remember there used to be talk about the skateboard, like basically Tesla selling the bottom of a car to all the other auto manufacturers, and other auto manufacturers putting their kind of bodies on and kind of doing things that way. So there's a lot of capabilities. Tesla doing major partnerships for batteries potentially in the future. There's so much there. It's just a question of what does Tesla want to actually give up versus not, and what does Elon really view as core technology that he's just absolutely not willing to partner with, versus it makes financial sense. And it's not uncommon for companies to partner with even their competition. A good example of this in an industry is Samsung. Almost every single time you buy an iPhone, you're actually giving money to Samsung, because usually there's different Samsung components in an iPhone. And so I think, that's always been a kind of a brilliant thing that Samsung does, because they're in many different business lines and they help a lot of other companies succeed, right? But it's funny, because I'm almost viewing Tesla as like it's Apple, but it's also Samsung. And so it's kind of a beautiful thing they got going on there. But the potential there is just massive for them to partner if Elon wants to go that route.
When you think about FSD from a financial point of view moving forward, obviously the robo taxi opportunity, it's fun to run the numbers, bit of a pipeline dream, and we know from your perspective you don't necessarily model all of that. But do you think from a level 4 or a level 3 autonomy point of view, that's kind of certain we're going to be getting at least around there, that's a massive subscription opportunity, especially when you consider all the safety features which could come along with a car operating at a high level 3 or level 4 level. Do you think that's kind of in the bag for Tesla, and that alone will be a massive revenue and profit driver moving forward?
Yeah, there's no doubt. There's absolutely no doubt that there's going to be a major profit driver, specifically, even more so than revenue, in my opinion, because obviously, the tech's built out and then it's just like straight profit for Tesla when they sell that. But what I think is going to be bigger for Tesla long term is what I think is going to happen is I think the majority of people that use FSD, true FSD, right? The whole deal, the holy real deal Holyfield. That's going to be folks that, in my opinion, are going to be paying a monthly fee for that to use that. And right now, I believe Tesla charges, I think it's $199 a month to have that capability. I really think it could be extremely compelling at 99. I know a lot of people have trouble paying that 199 a month because obviously some people just have the money like that. It's like, who cares? But a lot of people, the masses, 199 a month might be a little much. So if Tesla could ever bring it down to actually $99 a month, I think this would be almost a no-brainer where almost every single person that has a Tesla would be like, it's less than $100 a month to have true FSD in my car. I'm going to get that. And that goes right onto that services line item again. And that's a recurring revenue stream. And the most beautiful business models in the world are ones that have recurring revenue streams. Amazon Web Services, Intuit with what they have with QuickBooks, right? TurboTax products, Adobe, what Adobe has in their product suite. These are some of the best business models in the world. Apple, even because of their services business, and always just you're recurring. I pay for Apple Music every month and Apple Cloud and all this different stuff, right? And I don't even know I'm being charged for it. It's $10 here, $20 there. Those are the best business models. And so I can see with Tesla, I think that's going to be the bigger opportunity because not everybody wants to dish out of pocket $7,000, $10,000, whatever, for this FSD that they haven't even probably really tried that much. That they're like, I don't know about this. The people that are super into technology, they'll get it and have a lot of money, right? But a lot of other people are like $7,000, $10,000, $12,000 extra. I don't know about that. Oh, $99 a month if they ever did that. That is a much easier sell because then you're just trying it. 199, 299, so it gets a little tough.
Yeah. One thing I definitely learned as Tesla were lowering their prices is the lower the price, there's then an exponential increase in demand. This is for the car prices. Elon says the value of FSD is high. That's why he's pricing it high. But I think you're right there. I think moving it from 199 to 99 could 10x demand, and then that makes financial sense.
Yeah, I mean, at the end of the day, Elon will always make the best decision long term. But my thought is it's got to be the value proposition to people has to be so compelling. A lot of people do still like to drive. And a lot of people feel like they probably don't really need FSD that much. So, like every once in a while, it might be nice. If you live in LA, you might love it. If you live in New York City, you might love it. A very congested city that has a lot of traffic. But for a lot of people, they're like, I don't know, man. And so the value there has to be so compelling that it makes people say, you know what, this is amazing. I'm willing to pay for this. And that's when you have a true success. And you look at even Tesla's vehicles. Tesla gives you the best bang for the buck for any auto manufacturer in the world now at this point in time. When you look at what they're doing with Model 3, Model Y, the value is so compelling. And so it doesn't really matter what Elon thinks or what we think in terms of this technology is so amazing. You should pay a lot of money for this. At the end of the day, it comes down to what is a customer willing to pay for that? Are they willing to pay $3,000 a year to utilize that technology, or are they willing to pay $1,200 a year? $100 a month, $200 a month, $300 a month, and yeah, my thought process is when you get under that 100 price point, I think that's when you can really get a lot of people to say, I can tell you, I don't have full FSD on either of my Teslas, right? Why don't I have it? Well, if it was 99, damn it, I would. I would. I don't have it right now, but I can tell you if tomorrow Tesla put it at $99, I'm putting it on both the cars. Something to think about, Elon.
It's a parallel universe. Jeremy Lefebvre is working at Quick Trip in 2023, and he's just figured out what the stock market is going on, and you've got $1,000 to invest. and a little bit of monthly reoccurring uh, savings you can add to the stock market going forward. You've got $1,000. What do you spend it on?
Ooh, great question. So first thing is for the newer investors, I mean, income and expenses. You mentioned it had some recurring revenue. Like you got to have more income than expenses. It's such an it's one of the most important things to being a successful investor, but it's so overlooked. If you don't have more income than expenses every month, you've got to fix that ASAP. If you want to be an actual stock market investor, because there's no worse feeling than stocks going down, the market going down, you seeing a great opportunity, not being able to buy that opportunity because you've got more expenses than income, or you've got nothing at the end of each month. You better have money. Okay. So I think that just needs to be said off the front. So if I'm a new investor, the thing I would focus on is value stocks first, which is the same route I went, value stocks and dividend stocks. And I know a lot of people when they first get in the market, especially a lot of younger folks in the newer generation, they like to just go straight to the growth stocks, right? I want this and this, the growth, the growth. But at the end of the day, value and dividend stocks are so much easier to wrap your head around as a newer investor. And the reason being is they usually have very consistent business models. They have relatively easy to predict financials, P ratios that are usually very easy to understand. With growth investing, especially for a lot of newer investors, unless you get in at a kind of a perfect time, right? Which after you've gone through kind of a crash, you usually have a very good time as a beginner, which leads to too much confidence. So let's say, for instance, there were some people that got in right after the Rona crash of 2020, and they bought in some growth stocks and then they thought they were geniuses, right? And then obviously in this most recent crash we had, some folks have definitely bought some growth stocks and they think they know it all now and they don't need to, upgrade their game. That's usually danger. Start with value stocks, start with dividends, get your head around those, figure out how to run valuations on those companies, figure out if you're getting a good deal or not a good deal, be able to look back at the history of these stocks, be able to look at competitors. It's so much easier to judge, a Procter and Gamble versus XYZ company that has, 45% growth expected next year, but last year they revenue shrunk 20% for some crazy reason. And this year, no one knows what they're going to do for numbers, right? So, but once I get that rolling, I'd buy a few stocks, buy maybe 3-4 stocks to get started in the market with that first $1,000. You can maybe divvy it up, 4 stocks, $250 a pop, right? And some of these value dividend stocks. As you get more experience, more knowledge, more understanding of how to run financials, projections, what's a fair PE, what's a fair forward PE, what's a good balance sheet versus a bad balance sheet, income statements and things like that. Now we can at least start to approach some more of the growth stocks, right? Some more of the companies that businesses are maybe a little more of a roller coaster ride that's not as consistent. But make sure you get that foundation work first, because it's like, I come from the sports world way before I was ever a stock market investor, right? And so in sports, you build your body a specific way in the off season for success. You don't just go straight in the off season and start, doing max bench press and max squat or something like that. Like you don't train your body that way. You actually start with usually your core. And any good coach out there is always going to get you to get in good shape, get your endurance in, get your core right. And then we can start building out from there. And you'll usually do a lot more repetitions. And as you get closer and closer to the serious part of the season, you're going to do less repetitions, whether it's football, track, whatever you're training for. And so it's the same exact philosophy in stock market investing. Build a strong core first, branch out from there, and then in a matter of a few years, then you're going. And especially for young people are always in such a race. And I'm like, you've got time on your hands, man. If you're 65 and you're just trying to start learning investing, you're kind of in a bit of a race. But for a lot of people that are probably watching this video, you're 20s, 30s, you got a lot of time. Make sure you're working with urgency, but make sure you're getting your foundation right. If your foundation is not right, your house is going to collapse. It's like building a house, man. If the foundation is not right, the whole thing's going to fall in. It's just a matter of, is it going to fall in next year, or the year after, or 3 years from now? Getting that foundation right will get you through the bear markets. They'll get you through the crash markets. That's what got me through last year, because I've been doing this for a while. I got my foundation right, and I got hit and I got smacked last year in 2022, certainly, but I made it through to the other side and on to bigger and better things. So that's the thing I could preach.
If you could give yourself, broke Jeremy, one piece of advice on the back of a lesson that you've learned, what was the lesson? What is the advice?
Oh my gosh, there's so dang many, man. So many lessons. Oh gosh.
Which
I
is,
mean,
I guess, is actually great to hear because this is the
yeah,
reality of investing in the stock market. There's gonna be some
yeah.
losses. There's gonna be some lessons learned.
Yeah, there's going to be so many lessons. I mean, there's so many lessons I have around either mistakes I made with a stock in terms of buying a wrong stock or continuing to buy it, or situations where I sold a stock way too early. I've held some of the greatest companies ever. I sold a lot of those companies. Nvidia, I used to hold shares of Nvidia, and I sold, and I missed out on a 10x plus of Nvidia shares. Monster Energy, back when it was Hanson's Natural Beverage, one of the greatest stocks in the past 20 years of being in the stock market. I held that stock. And unfortunately, as of today, I have no shares in that stock. So I've made a lot of blunders when it comes to seeing the vision for this company, and like, this is going to be huge, and then taking my profits way too soon. So there's a million of them. But the main one, I would say, you got to outwork people. You got to outwork, the world's competitive. The ones who always win are the ones that outwork their competition. If you are not willing to outwork your competition and do things that other people just won't do, you're not going to advance. And I've seen it consistently just in my own life, never mind like friends and peers, and I've seen it in their lives, but I've seen it in my own life. Like in track, I always had to outwork everybody. When I worked at Walgreens, outworked everybody so I could get at least good hours at my store. At Quick Trip, I outworked everybody. A lot of people didn't want to get up at 4 a.m. or they, sometimes would slack or whatever. And I just made sure I grinded and gave it 100%. And I'd get promotions. I'd get the best bonusing stores, so I had more money to put in the market. Stock market investing, looking into stocks, researching the stocks. You can't slack on any of this stuff because you will be beat. And, I've obviously been thankful to have a tremendous amount of success on YouTube. 4 silver play buttons. There's only one other finance creator in the world who has 4 in the finance community that has 4 silver play buttons. He's my neighbor, and we're the only 2 in the whole world that are in the finance community that have 4 silver play buttons. And it's just grind, man. You've got to outwork everybody. A lot of people, want to take a day off. Like, hell with this, man. And you can do that, and you can still have a level of success. You just got to understand, like, if you really want to push it, you've got to dig places in you that just other people are just like, oh no, they're crazy, man. I'm not willing to do that. And that's when you have the most success, I guess you can say. And when you can look back at yourself and be like, damn, I'm proud I did that. And I can tell you, there's so much hard work I put in my life in different areas that I'm like, I'm so happy I did that, because if I didn't do that, I would not be here today. If I was not reading annual reports at midnight when I was 21 years old while other people were out partying, I can tell you I wouldn't be here today. If I wasn't willing to work at Quick Trip and work those overnight shifts at stores I didn't really want to work at in bad areas and stuff like that, I can tell you I wouldn't be here. And so when you look back on your life and you realize where you're at then at that point in time, and you look back, it's like a full circle moment where you're like, damn, man, like, thank you. Thank you for putting in that grind, because that was worth it. That was worth it. I haven't met somebody yet that didn't work their face off and was like, oh, it didn't pay off. Every single person I ever know that like really went after it, man, over a 3-5 year span, all of a sudden they're like, oh, I'm happy I did it. It was brutal, but I'm happy I did it because it paid off, and it paid off big.
This video is, of course, mainly based on the stock market, but if it was you and you only had $1,000 to your name which you could invest, do you think you'd be maybe better served launching a business, or maybe trying something else before you do jump directly into the stock market, or a bit of both at the same time?
Yeah, I mean, I would get started with investing as early as possible, unless there's some vision you have of like, this is going to work and I'm going to do this. I need to spend $1,000 there. But at the end of the day, it all comes back to investing and being able to make your money into money without you having to put an effort to that. As any person that has been successful in their business, what they wish they knew was how to invest. Because then imagine you build a successful business, okay? And imagine, you sell it for $5 million. You have this great exit. Okay, I made $5 million. What do you do with the $5 million? You put it in a savings account now? Do you try to invest it and make your money into money, right? Are you stressing because now you're like, damn, I don't know how to invest? So at the end of the day, I would always get started with investing as early as possible. You can do a lot of things. Like, people are like, well, I can't focus on this. Yes, you can. I used to work 3 jobs, run for my college full time, and take, I don't know how many credit hours, a ton of credit hours in terms of classes and all that stuff, and still had a social life and still did stock market. Like, you can freaking do it. And so I would say to everybody out there, like, get rolling with it ASAP. Don't make excuses. People love to make excuses. It's just an excuse. Just understand. Every time you say, I don't have time right now, baloney. You got freaking time. You can make the time. You're choosing not to search for the time. And that's a choice you can make. Just understand, the only person you're fooling is yourself. Anybody that really goes after it, yeah, we don't make excuses like that. We're like, we'll find the time. We'll make it work. And that's what differentiates the people that are extremely successful from the people that are just, kind of going along in life.